Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario, where we're still looking for a move towards the downside in a wave Y, which then is a three-wave structure to the downside, where the most common target for wave Y is between the 1 and the 1.236, sitting between 26.1k and 25k. Now inside of this wave X, we are then looking for a three-wave structure in an ABC, where the most common target area for a wave C in an expanding flat, which is again a 3-3 then 5-wave structure, is between the two 1.618. And you can see that the upper 1.618 has been very nicely respected, taking some liquidity of the 31k high for then potentially a move towards the downside. Because if we look on the micro, which I will show you in a second, and so far I'm not really convinced this is an impulsive structure to the upside, but a corrective structure, meaning that the probabilities are higher to still take this low at some point. If we then go to the bullish scenario, then we can expect further upside. Now a wave 2 also usually goes deeper, so more downside could be expected for a wave 2 as well, with the 0.5 to the 0.786 being the most common targets for a wave 2, which is between 27.9k and 26k, with the 382 being a rare target, as well as the 886, and the 236 is a very, very rare target. But in this scenario, wave Y is already in. This is an impulse to the upside in a wave 1, looking for 2 for then a 3 to the upside. So basically what it means is that if price is going to move to the downside, it's going to be very important to observe how price is going to move towards the downside, because of course for wave 2 we also expect a three-wave structure, but it has to go a lot less deep than in the bearish scenario, because in the bearish scenario you preferably want to see wave Y going below wave W. Well, in a wave 2, you don't want to see it get close all the way to the low, right? You want to preferably see it somewhere end over here, and that depends on the structures that price is going to form if it is going to move towards the downside. If we then go to the first low time frame structure over here, then we already have a finished impulsive move in a 5-wave move, right? A 1, 2, 3, 4, 5-wave move to the upside that is finished either in a wave C for then starting a Y to the downside, or a wave 1 for then eventually a wave 2 to the downside. Now what you see over here is also fib times, the vertical lines on the chart taken from the low of this wave B over here, or the impulsive structure, to the high of wave 5. What you then do is you compare the time of the impulse with the time of the correction. And so far we have reached the 1-to-1. As you can see, price is now ranging between the 1-to-1 fib time and the 1.618, which is still fine for a wave 2. The low over here has been made between the 0.618 and the 1-to-1, also fine for a wave 2. And we have to wait and see if we're going to get close to the 1.618, which for a wave 2 is also still possible, because corrective structures can be long. If we really go longer than the 1.618 or the 2 fib time, we might have to look for different structures. However, as it stands now, we're of course not even close to that. So let's just wait and see what's going to happen today on this Sunday. Now price did hit the 0.236, which again, for a wave 2 is actually an extremely bullish target if we would turn around and move to the upside impulsively, but at the moment locally it doesn't feel like a great impulsive structure as it stands. And we'll go to the micro and actually observe the bounce that we had from the low, because we were looking for this key area over here for a long time, right? Inside of this range we were looking for 29.5k. Eventually price came down very, very impulsively, big wick over here, taking that low inside the most common target area for a wave Y, which is between the 1 and the 1.236, taken from the high to the low of W to the high of X. So that was beautiful. Also after, price took the double top, and always keep an eye on double tops or double bottoms. And very shortly, because I do see some confusion in Discord sometimes, a double top is that we have a high and then another high on the right side, which is a little bit lower. So not all the way down here, right? This is not a double top. You want to see a little bit of a lower high, and therefore you have a double high now with a liquidity pool above, because you can imagine some shorts over here or stop losses over here, some stop losses over here as well. Like, this is a nice double top. If this low was lower somewhere here, then you don't call it a double top, you know, it's just market structure. So you want to see two highs very closely related to one another. If this high would have been above the high on the left, you don't call it a double top as well, because this one has already been wicked. Now in this scenario we then had a double top, and those are like magnets for price, so always keep a good eye on potential double tops and double bottoms. Price wicked above, eventually backtested the double top perfectly with some bearish divergences as we spoke about, for then this big move to the downside. Brilliant. But then this move to the upside like we have now, we can go to the 5-minute. This doesn't look impulsive, right? This is, yeah, we have a bit of a move over here. It looks more like a three-way structure. Let's actually go to the 15. And then we started ranging over here. Very, very, very long range, right? Now, of course, price can move to the upside, which I will show you in a second. But over here, this move to the upside, or even just the whole thing, it doesn't look like a 5-wave impulsive structure to the upside. As it stands, looks more corrective in a 3-wave structure, potentially a 3, and then another move towards the upside, which I will show you in a second. It's just that for a very bullish scenario where this is a 1, 2, and then a bigger 3 to the upside, this doesn't give you a lot of confidence. Now, that doesn't mean that we cannot go to the upside, because if we look at corrective structures, you can still continue to the upside before further downside. It doesn't mean price has to go down like this to fill this wick and take the low over here. It has possibilities for a wave X or a wave B. Now in a WXY over here, a W, 3 waves in X and then eventually a wave Y, you expect more downside, but wave X of course is still a move towards the upside. And if you take a fib from the beginning to the low of W and you then put this on the wave X fib targets, then you can see that so far the golden pocket has been hit, the green lines. And that is a common target for a wave X, but also the 786 and also the 886 are targets for a wave X. So this could only be the beginning of a wave X for then something like this, more upside, and then a move to the downside. And even a wave X can also go above the highs, but now for that I put an ABC on the chart because I think that is so attractive. That if this is a 3-wave structure in a wave A, you can be followed by a 3-wave structure in a wave B, where the most common target for a wave B in an expanding flat, because that's what we're then looking for in ABC, most common target between the 1.236 and 1.38, which is between 31.9k and 32.2k, very, very close to the 2022 range highs for maybe a wick, taking all this liquidity and then move down impulsively, which might scare some people, but that's good because eventually what you want is this then to be a wave C and then return for more bullish market structure. So wave C is a quick move. It's an impulse to the downside. People might get scared like, oh shit, there we go, you know, all the way to the downside. But then, hey, it is a wave C and we return to the upside in bullish market structure. That could be very, very interesting. Also, as then a wave C, as well as a WXY, by the way, gives us a little bit lower prices, which might be very attractive for the more bullish scenario, as we preferably want to see these fibs being hit instead of the 236, right? And we also have a couple of support areas. First of all, we have this one, which I think is very attractive for a wave Y, and then potentially a WXY scenario, where this target box, this support area is between 28.8k and 29k, and then we wait and see what happens there before price potentially moves to lower areas. If we then do look to the second scenario that I have, which is an alternative scenario as it stands right now, is that this is a 1, 2, 3, 4 is in, and then 5. I mean, if we go down again, then yeah, this wave 4 is already taking too long, in my opinion, for a potential wave 4, as it crossed the 4 fib time, taken from the high of 1 to the low of 2 to the high of 3. And usually I don't like a wave 4 to go longer than the 3 fib time, which is like somewhere over here, but this is already longer than the 4 fib time when this low was made. And you can just see that the proportions of this move to the upside don't really work, right? Yes, wave 4 is usually longer in time compared to a wave 2, but it still has to be in relationship to one another, and this is extremely long. It did wick the key area that also in this scenario we were looking for, but then you want to see an impulsive structure to the upside, so a wave 1, 2, 3, 4, 5 for then a wave 5. Most common target for wave 5 is between the fibs over here in confluence with the 2022 range highs for then again a wick and potential move to the downside for a bigger corrective structure. But as it stands, just because of the length and time of this wave 4, this is an alternative scenario. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.